Ashwini Agarwal is with us. He's founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thank you very much for your time. Just a quick word, Ashwini, on the market itself, which has done very well, and it continues to push higher. And you throw in the fact that global markets have also turned very positive. And the big theme there has been rate hikes behind, soft landing, rate cuts perhaps in 24. Here in India, except sort of, a lot of hand-wringing about valuations being very expensive, there's not very much negative in that sense of the margin. So what's your best sense, Ashwini, in terms of what the market does from here?
So Prashant, excellent question, because if you just think about the last 2 months, what we saw was significant global concerns on account of high inflation, high rates, and the events in the Middle East weighing down the market. And then all these concerns seem to have faded away over the last month or so. We are also seeing very strong earnings trajectory come through. The Q2 earnings in aggregate, I think, were ahead of analyst expectations, so that's also helped. And like you said, there don't seem to be many worries around, barring the hand-wringing on valuations. Going ahead, I really don't see much concern with the market. There are events out there which might force us to rethink this view. Events like unprecedented outcomes in the state elections that are around the corner, or maybe a known unknown risk. And what I mean by known unknown risks are the fact that rates are today much higher in the Western world than they've been in the last 20 years, which can create an event which we can't anticipate. But higher rates do pose risks to various financial companies. So that's one. And the other is, all these comments the regulators been making about the F&O market and very high retail participation in the F&O market, which is kind of, buying off lottery tickets, and which is not healthy for the market or the investors in the long run. And I suppose if there was a regulatory change that were to come about, I have no idea how that will affect the market, but might be a notch down for the sentiment. So, these are events which are kind of known unknowns, and then we have the unknowns. So those are the things that might bring the market down. Otherwise, from what we can see, I think the market's in a very healthy space.
Okay, market is in a healthy space. Got that. By the way, Tata Motors is in focus. The stock is now at a fresh record high. The stock has been one of the biggest gainers this year, undoubtedly. It's up almost 80% in 2023, and lots going for Tata Motors, whether it's the strength in JLR sales, whether it's the debt reduction, and the free cash flow positive, status that they've assumed, as well as their stake in Tata Technologies. So, Ashwini, hi, good morning, and thanks for joining in. I wanted your thoughts on some of these names that have done exceptionally well this year. Do you think there can be some follow-on buying next year as well?
Sonia, a lot of these stocks that have done well are still reasonable on valuations. Some of them have, of course, run ahead, but many of them are still reasonable on valuations. And if the earnings support is there, then the stocks can soldier on. Over the last 15 years or so, if you look at the trend, what drives stocks is earnings momentum. That is the single common factor, across sector rotation, across market cap rotation, whatever you call it. So if there is earnings momentum, then I don't see why a stock may not do well just because it has done well in the past. That doesn't work. Valuations go off reasonable levels and stay there till the earnings momentum continues. It doesn't work for people like me who are value oriented in style, but it is what it is.
Hi, Ashwini. Good to have you on the show. Ashwini, these PSUs, many of them have re-rated, and I'm looking across the spectrum. Whether you look at the Coal Indias, the NTPCs of the world, they have been big outperformers. PSU banks as well have done well. From the PSU basket itself, what is exciting you? Is it the banking names? Is it some of these railway names or defense names?
So, the banks look all right to me, and especially the frontliners, because they've moved less. They look okay because I think the credit cycle is still very favorable, unless an unanticipated crisis on the retail credit side comes through, which RBI has, tried to temper down. Barring that, I don't really see a risk for financials, so I'm quite okay with the financials. In defense and railways, I think both valuations are stretched. And I worry about disappointments on order flow, disappointments on payments, disputes, which often arise when government is your primary customer. Those are two areas that I don't feel so excited about. But yeah, banks and financials still look quite all right.
I got that. Ashwini, any of the recent already listed companies or about to be listed companies on your radar? It's an IPO storm this week, especially. Go on.
Yeah, so this week is, I think, the biggest IPO week in last 2 years is what I read somewhere. I don't know whether the arithmetic is right or not, but that's what I read. And obviously, Tata Technologies is going to be a very hot IPO, and the other IPOs are also reasonably good quality and fairly well priced. So let's see how they trade. Given they're all bunched together, that probably is another small headwind for the market and for secondary cash market, especially. But in the listed space, I'm going to sound like a repetition of what I've said before. I think the spaces to look out for is mid-sized companies where the headwinds of the last 2 years are now turning into tailwinds. What I mean is that companies that suffered from high raw material prices, high transportation costs, high logistics costs, or one of such events, over the last 2 years, those costs are normalizing. And if we can find those ideas, I mean, unfortunately, I can't comment on individual companies, but it's downstream chemicals, it's a couple of, EPC companies of a differentiated business. Those are the places that I'm looking at where your margin has tailwinds from the unwinding of high raw material prices, input costs, or transportation costs. I mean, in the pharma space, you'll find a bunch of these things. In the downstream chemical space, you'll find a bunch of these ideas. So here, I think the earnings momentum might surprise on the positive side, and valuations are still quite reasonable.
Okay. By the way, a lot of stocks are doing well this morning. Honasa, ahead of its numbers today, is up 3.5%. That's the Mama Earth parent company. It had a muted listing. It saw its own share of ups and downs. But now in the last couple of days, Honasa has been doing well. So keep an eye out on that. And not just Tata Motors, but the Tata Motors DVR is also at a fresh high. So just track that closely. Apart from that, many auto ancillaries, whether it's something like a Varroc Engineering, also doing pretty well. The others, the big thing to watch out for, Ashwini, now over the next couple of months is the elections, right? There's a lot that happens during election time, whether it's extra government spending towards infrastructure, etc. But from a stock market point of view, A, do you see this as a big trigger? And B, which are the, sectors or areas to focus on?
I don't know how to position myself from a sectoral standpoint for an elections because, yes, you're right that in the short run, the rural demand, which has been a huge bugbear for consumer companies, might receive some lift from all the spending that elections will entail. But outside of that, there's really very little to think about from a sectoral perspective. I think the big thing is to see whether the BJP actually does as well as or as well as most of us hope for, or there's going to be a question mark on who leads the next government. I mean, that the latter outcome is certainly not priced in. So back of our minds, all of us who've been around for a bit remember 2004. And obviously, all of us are hoping that we won't see a repeat of that. But that's the only thing that I worry about in some way. That will all our calculations be laid to rest, and something very different happens between now and when the election results come out around the middle or end of May, whenever it is. So that's what I worry about. But that's, I think, a low probability outcome. So one has to stay invested and keep an eye on that ball as we go along.
Okay, Ashwini, so the state elections, irrespective of the outcome, it'll be just a knee-jerk reaction for a day and then you move on?
Yeah, I don't think state elections really matter because we've seen enough evidence over the last couple of decades that states and the center The elections are, fought by different candidates, and the issues are very different, and the voter behaves very differently. In the same constituency, we've seen, different vote shares for one party in the state versus the center, even when the elections have been held on the same date or, very close to each other within a span of 6 months. So I think state elections is going to be noise. And, as you say, one has to move on after that.
Okay, stay with us, Ashwini. Just want to take stock of some more stocks here, which are moving around. By the way, the market breadth is pretty positive, 2:1 in favor of gainers, and it looks good. I mean, pull up something, and these are names which were not there in the morning. KPR Mills, it's got huge volumes. I don't remember mentioning this at the right at the word go anytime recently. 8% gains, 922. And it's got the largest volume-led gainer across the board now. Not sure if there's been a block or something, but very large volumes on KPR Mills. NHPC is another one which has come up with large volumes, 3%. CDSL was not there in the when we started 10-15 minutes back, 2.5% on CDSL. Stocks at about 1770 or so now. There is Honasa, which is Mamaearth. Sonia has been talking about that, 3%, 376 on Honasa. There is Nitin Spinners. So textiles, is it a theme? I'm not sure, but I can spot at least two names which we don't usually find. Nitin Spinners and KPR Mills, both of them coming up with large volumes. Maybe we could look at, of course, the Gokuldas stock as well, which has done very well. It's past 900. It's up about 1.5% or so. So, keep an eye out in that space, because there seems to be a little bit of activity sector-wise coming through. IOL Chemicals is another one which is up about 4%, 4.5%, and something like a ITD Cementation is coming up with about a 4% odd pop as well. So looking very, very strong. Ashwini, just a quick word on names like the fintech names. Actually, I'm talking about Paytm more than anything else, especially after what the RBI did late last week with regards to curbing the enthusiasm on personal loans, unsecured credit basically. And we got a range of opinion. Everyone gets impacted, but what we did here is that lower ticket size lending, up to 50,000 rupees is what gets impacted the most. That's the segment where a lot of the fintechs are in. Actually, 50 is way higher. It's much smaller than that. What's your view, Ashwini, if you have one? From the lows, of course, the Paytm stock's done well.
So, in my experience, again, RBI is usually ahead of the curve. And when RBI starts ringing alarm bells, they're obviously looking at data which is far more granular, far more nuanced than any one of us have access to. So if they're worried about something, then I think one shouldn't take that lightly. They may be being extra cautious given what happened, as early as 3 years ago. So it's a possibility they are kind of applying the brakes a tad early. Because when you speak to the lenders, they say there is no stress in the system. The 90-day past due numbers, the 60-day past due numbers, 30-day past due numbers are very, very nominal and all within control. But the leverage is certainly building up in the system. Also, if you look at the global scenario, okay, high rates are resulting in softer growth globally in the world, and this will feed through to India via exports. I mean, the China plus one is all right, manufacturing locally in India is all right, all of that will help. But there is a broader global trend which will have an impact on India as well. So from that perspective, I think what RBI is doing is right, and I would be a little cautious in areas where unsecured lending is prevalent in a massive way, because I think these things turn on a dime. I mean, suddenly you find that the loss ratios are unacceptably high, or the stress is starting to show through, and derating can be immediate. So I'm staying out of here for the time being, and I've been out of this space for a while.
Okay, all right. Just before we let you go, I know we spoke briefly about Tata Motors, right? But overall, for the auto sector, you mentioned that valuations still look compelling for some of these spaces.
Yes.
Which are the pockets that you like? Is it specific to the electrification theme, or do you like pockets like commercial vehicles where demand is coming back in a big way? If you can just elaborate.
Yeah, it's commercial vehicles. I think that's the most interesting space. And then, a couple of two-wheelers, and even on the four-wheeler side, Maruti, I have no position there, but it's looking very interesting because the operating leverage in Maruti has always been very hard to predict. And the shift to higher value cars, as well as the softening of raw materials, which is a broader theme that I spoke about earlier, both help Maruti in a big way. So, all these auto companies are looking fairly interesting, and earnings growth is going to be pretty decent. Valuations are around median levels if you look at long-term trailing history. So they're not expensive, and if the earnings momentum is there, then the stocks will do well. On the component side, there are pockets which are still looking okay. I mean, I'm trying to stay out of auto components which have a significant ICE exposure, because there will be a shift there, and the shift will happen faster than we can anticipate. So one has to be careful about which auto components, but tires, for example, look all right. And I think again, the pricing environment there on the end product side as well as raw material side is quite supportive. So there are bits and pieces that one can make a sense of.
Okay, all right. Well, Ashwini, final question from my end before we let you go. The hope is that maybe some of that commodity price erosion that we have seen in this year so far is reaching some level where we can see a bit of a bounce. Now, if that's the case, how do you play some of these metal companies? Because the good news is maybe the output cost, the selling price will go up, but the problem is that the input cost as well is going up. Namely, coking coal has bounced back up. Your take?
It's a dollar trade. So it's a softer dollar, which is resulting in increase in prices of all materials. And the fact that, demand has turned out to be a little bit better than expected, and output investments haven't happened globally in the last several years. So you should expect some bounce in base materials. I don't see that happening on the oil product chain, but I do see that on the base material side. I don't know how to play it. I don't play metals because there are far too many global events that shape these prices. So I don't play it, so I can't advise you how to do it. But in the short run, I think it's more of a dollar trade than anything else. Softer dollars driving up prices for all these base metals.
Got it, Ashwini. By the way, have you looked at Honasa closely, given it a look about the business model, or any thoughts at all? This is Mama.
It's very interesting. Yes, I know. It's very interesting, and like you mentioned, that the initial trades gave a very attractive entry opportunity. I looked at it, but I kind of didn't press the button, and I'm kicking myself for that. It's trading at reasonable valuations, about 6 times revenue, I think, now. So it's interesting, but yeah, I don't have a firm view at this price anymore.
I mean, if you want, you can still type. You can press the button. It's not as if it's run away, right? Of course, it's done well from where it came and from the lows that it made after listing. But we're in a market where, doing well is a very high bar, right? I mean, you're talking about 50-60% in a month, 2 months. That's the kind of market we've gotten used to. Anyway, we'll leave it there. Great chat as always, Ashwini. Appreciate you joining in here on CNBC TV 18. And thanks very much for your perspective on a variety of issues.